Welcome back. Let's get chatting with the management of Kalpataru Power, the first corporate guest on our show. This has the NCLT has approved the merger of Kalpataru Power with JMC Projects. We have Mr. Munot, who's the chairman of the company, joining in to give us more details on the same. Thanks a lot, Mr. Munot, for joining in. Season's greetings to you and your team as well. The first question that begets asking is about this NCLT nod for the merger that you've got for, the merger with JMC Projects. Just wanted to understand when this merger will be consummated, what kind of synergy benefits do you expect on the cost and revenue front? And will there be any sort of financial cost savings? Can you detail these, numbers for us?
Yes. Good morning. Look, our focus will always be on EPC business across all the sectors which we are in: transmission, buildings and factories, infrastructure, urban infra, as well as water and water. These are the major projects which we will be continuing. Our whole focus will always be in growth in these sectors, but with a lot of more higher capabilities because of the merged entity with the technical, engineering, electromechanical, all that, and on the high value jobs.
Okay.
This will be our focus. Also, our focus will be that today Kalpataru Power is in transmission lines in 67 countries abroad. We would like to go across the other field to these countries to have a higher growth.
Got it. So you are planning higher growth with this merger that has come in, but can you give us some numbers, Mr. Munot, here? Can you give us a sense of by when this merger will get completed now that you have received the NCLT nod, and what kind of cost savings will you see? What are the synergies? Because these are some numbers that investors can work with, and that will help them analyze the growth prospects of the company, of the merged entity as well.
The cost saving is apparent, which is on interest cost as well as the productivity improvement in this sector, which will be in the tune of about 100 crore minimum, as well as the growth path will continue, and this merger will consummate within 30 days time, which is mandated in the law.
Okay, so 30 days is when the merger gets effected and you save about 100 crores in interest costs, and the combined order visibility for these companies is around 43,000 odd crore rupees. Mr. Munot, earlier there were worries about capital allocation. In fact, investment in several transmission assets and road assets, as well as some other non-core investments, even promoter pledges. Can you give us a sense of the promoter pledge right now? What is the plan to reduce it? And do you now have a capital allocation policy in place? Can you detail that for us?
Yes, we have got a prudent capital allocation policy for last couple of years. And last 5-7 years, we have not invested except in our core business of EPC. We have sold our transmission assets and cashed it, as well as we have exited from one of the road projects. We are continuously working on to disinvest the other road assets as well as the other non-core activities, which will be a very continuous efforts. As far as the pledge is concerned, it's gradually reducing, and will continue to reduce this pledge.
And when will you completely give away your pledge or completely reduce the pledge that you have in the books? What is the current number, Mr. Munot?
Numbers is around 650% of the pledge of the holding.
Okay. And say by FY24, a timeline by when it will become zero?
It will gradually come down in a course of time.
All right. You had given us an order inflow guidance of 21,000 crores for FY23. Do you maintain that right now? We still have the fourth quarter to go by. And with this combined business, what is your order visibility for FY24?
Today we have got an order book of about 40,000 crores, plus we are in L1 in 4,000 crores. We will be definitely in target of our achieving 25,000 crores in by 25. As far as the current year's order book is concerned, we had a target of 21,000 crores. Out of this, 16,000 crores we have already obtained, and we are confident that remaining remaining will also be achieved by the end of the year.
Okay, take that point. Mr. Munot, you did speak about, you've exited some of their road projects. You're looking to divest other road assets as well. Can you give us an idea of what's the plan regarding divesting your non-core assets, the Indore Real Estate, Sri Shubham Logistics Limited, and what kind of consideration do you expect to receive once you actually go ahead and sell stake or sell the entire stake in these assets?
Yeah, I mean, we are continuously working on it to restructure or sell away the assets. Or similarly, Indore building is complete, and will be definitely be receiving certain cash flow. As well as Shubham, we are continuously in efforts to disinvest our interest. We expect about 100 crores in next 1 year's time out of this non-core assets.
From all the non-core assets, you expect around 100 crore rupees, or is it from any individual of the ones that I named?
No, it will be mainly from Indore, basically, and if we get other disinvestment done, then it will be further.
How much can that be? 100 crores from Indore. You have Sri Shubham Logistics and the other projects as well.
Yes, that depends on our efforts are on. I'm sure by in this next year, we definitely hope to achieve certain.
And the 100 crore comes in this financial year itself. The Indore project gets done
in 1 year's time.
Within 1 year. Okay, take that point. And finally, before we let you go, FY23, I mean, earlier you had a guidance of 15% on the revenue with profit before tax margins of 4.5 to about 5 odd percent. Do you maintain that? And now that we're also looking at FY24 with a consolidated entity, what kind of numbers can you guide for?
Yes, we are confident of achieving 15% growth all across, and as well as the margins, what we have projected on an EBITDA of about 9%, we'll definitely be able to achieve.
Okay. All right, Mr. Munot, thank you so much for joining us here today and speaking with us and answering all those questions patiently. It was a pleasure speaking with you. That's the word coming in from the chairman of Kalpataru Power Transmission. They are expecting synergies here, cost savings, that is interest cost savings of around 100 crore rupees. The combined order book of both the entities is 43,000 crore rupees. And yes, they are changing the structure, looking at selling some non-core assets as well. From the real estate asset, expect to get in around 100 crore rupees. The stock is up 23% in last 3 months. Slip into a short break now. We'll get you more on markets and other specific details on the other side.